Okay, so let's start with Aeryn. Aeryn's the CEO and co-founder at Xion Global, and he's here somewhere. There he is. I'm going to let these guys talk a little bit more about their businesses just now. Matt is booze for Matt. He's from Tether. So he's the expansion manager for Tether, so Tether's man in Africa. And then we've got Hannes, who you know from earlier, the local man for Binance. So we're going to be talking about crypto payments and what's going on in the latest innovations and developments and so on, particularly from a sort of ecosystem perspective. And I want to just start by kind of positioning it with talking about Argentina. If we look at the top down stuff in crypto, you can look at what people like the Bank of International Settlements are doing, trying to fix cross-border payments. It's clearly broken, but at the bottom, the kind of ground-up stuff, it's really interesting to me what's happening in Argentina, and it's kind of proximate to what goes on here in Africa. So you've got a history of huge devaluation of the peso and banks taking over dollar balances and converting them without any recourse for their customers to dollars. And so what we started to see in Argentina is people getting their salaries, buying USDT with their salaries, and then transacting in dollars, and doing that via exchanges, doing that with cards issued by payments providers. And so there's kind of three pieces to that model for me. There's the exchange, there's the stable coin, and there's the payment provider, and we've got all three here. So I want to start by just asking each panelist about how that ecosystem works from their perspective. So Hannes, to start with you, the role of the exchange in that kind of thing, and maybe a few facts and figures you can give us if you can share some numbers.
Yeah, thank you, Paul. So let's start with those numbers. I mean, since we started with Binance Pay in South Africa, we've seen a big uptake. Going back to January last year, I've seen an almost 700% increase in the number of users using our pay function, both in terms of fiat rails as well as in stable coins, to almost 6,000 users a month, which, we talk about these things, but it's real. Looking at the volumes, that has gone up to almost $6 million a month, which if you think back to South African rands is a considerable amount. You think this was a very small space 18 months to 24 months ago. So purely in terms of the uptake that we've seen working with some of our partners, it's been real. The role of Binance in this, obviously as a centralized exchange, we've got the rails to take whatever you've designated in your Binance Pay wallet to pay for your merchants and get whatever you want to do. I think our JV with Crypto Convert on Pick and Pay is our best example, but it works really well, and a lot of folks use it every week.
Yeah, there's a lot of overlap between the different pieces. Matt, from a stablecoin perspective, what's your sort of view of things?
Great to be here. Hope to bring the good attitude. So, of course, stablecoins fulfill the role of the medium or the token, which is a tokenized version of the fiat currency. And really, it's, for me, accessibility. So you talked about these markets, developing markets, where people struggle to get access to dollars. Tether being the first and biggest stablecoin by market cap, obviously has significant liquidity and is able to be accessed in markets like the ones that you've mentioned. So really, for me, the important role that Tether is playing there is really that of accessibility and financial inclusion for people who are looking for dollar access and liquidity but are unable to get it due to the traditional kind of financial system, potentially them not being profitable enough for banks to actually bank. And in summary, I guess that's it.
Yeah, you're satisfying a need, and it seems to me that if we're meant to be worried about whether Tether's got the money backing. If we just keep working in Tethers, it doesn't really matter too much. You don't ever go back. Aeryn, maybe tell us a little bit about Xion Global, because we're pretty familiar with Binance and Tether because of their scale. You're a bit younger in the market, I think.
Yeah.
So maybe tell us a little bit about that, and then the role of a payment facilitator like Xion in this kind of in this payments ecosystem.
Yeah, sure. So, funny enough, we actually partnered with Tether some time back, and really what we do is Web3 payments infrastructure. So we are relatively new into the market, but we've already made quite a big footprint, particularly on the South African market. That being Scan to Pay, which is, as you know, like one of Zappa's competitors, and you might have seen some of the billboards up in VNA that we have up. But essentially what we do is we provide a one-click crypto payment solution. where we integrate directly with different payment service providers and working closely with some of the FSPs as well to really gear the decentralized finance community to be able to participate in the traditional payment rails. So for us, even looking at the Argentina side, I think it was really like 200-something% in the inflation that we saw there. And what we even noticed just from Argentina's perspective is 60% of all the crypto transactions were done in stablecoins. So when you look at Argentina and then you now look and shift towards South Africa and Africa in general, I think there's a huge shift in the low LSM market where you're not actually aware of how many people in the low LSM market actually have crypto and are using even just USDT on a day-to-day basis for cross-border and remittance, but now actually really looking at their purchasing power to use it on everyday payments, especially bill payments, airtime, and data, which we have seen dramatically in just some of our integrations, like ScanToPay, for instance.
Yeah, and I think that for me is you've got the utility. You're providing a service for real people to do stuff, which is what it's about. I think for me, one of the things that's really interesting is this process of adoption. I mean, we'd all maybe love to be living in crypto or stable coins 100% of the time. That process takes a while, and it's a kind of disruptive innovation model. There's this thing being built on the side that's driven by a mixture of consumer needs that aren't satisfied in other ways, and we can talk about financial inclusion just now, but also the sort of external forces changing things, and there's a kind of, the adoption is driven by the consumers on one side, the merchants on the other side. I'm looking at the guy who spoke first this morning, or one of the first guys in the kind of green shirt, Payphone or something, Fonbank. This two-sided model. You've got the merchant on one side, you've got the payment, the user, the consumer on the other side. There's a kind of chicken egg thing there. How do you see that working, Aeryn? How do you use that chicken egg thing? Which comes first?
So you obviously have to provide that accessibility and those points of sale. So you're actually being able to enable consumers to start performing payments. So that's where we play a very close role with different payment service providers, so that you're really tapping into these existing merchant bases that have a lot of trust within these current payment service providers to be able to start facilitating these new payment methods and actually start transacting with them. The biggest thing, though, when it comes down to the PSP level side of things is when it comes to a crypto payments integration, it has to be relatively easy, and you need to abstract anything Web3 or blockchain related because it just goes completely over their head. They're used to generalized EFT payments, card payments, that sort of thing. So what you really have to do from a merchant basis is make sure it's positioned enough for an integration from a merchant level. And from a consumer basis, you have to make sure the experience as well as the interoperability and access is also really, really easy. So, for instance, one-click crypto payments is a major beneficial thing when you're coming into, say, checkers, where it may be, to be able to transact in one click at that time without having to open up all these different apps. Yeah. And there could be data restrictions and so forth. So I do think from a merchant basis, providing that accessibility definitely is very crucial, especially because users already trust those providers and those end merchants. And from a consumer level, it's saying you're looking at the low LSM that are now coming into the market, where there needs to be just simple phone number sign-ups for wallets and emails. They don't need to go to an exchange, KYC and so forth. So yeah, it's twofold, definitely merchant and then our consumer side for sure.
Yeah. And Matt, what do you think? What are the kind of catalysts nudging people into this space?
So I think both the consumer and merchant side are incredibly important, and you probably can't point at one and say that's kind of the egg or the chicken. So we need to do work across both, and that's what Tether's plans are, right? On the continent, we want to create awareness and education at the consumer level and work with partners to make sure that accessibility is there. And then with kind of PSP providers, different people who are actually allowing people to take those tokens and actually spend them as they would in a way that makes sense to them. So both incredibly important.
And Hannes, is this kind of flywheel, what gets it spinning? What's the kind of things that they help to build the ecosystem from an exchange perspective?
I think Aeryn said it very well in terms of the balance between the merchant and the retail user, but I think we need to lean more into the merchant side and create that virtuous cycle where you promote both of them and the one ends up promoting the other and vice versa. If I put myself in the merchant's shoe, and I think this is something we need to remember, is these guys, especially the SMEs, have very tight working capital cycles. You need to emphasize, take Tether as an example, the rate of settlement, how quickly it settles versus a traditional payment system. So you can just spin your working capital cycle so much faster, meaning you can do business so much faster. And I think that bit is not always emphasized enough.
Yeah, that's one thing that struck me reading about Argentina is you got inflation that's running it, or the devaluation of the peso, like almost 1% a day kind of thing. If it takes, I heard something like 30 to 60 days in the payment system for the money to get in, and if it's in pesos, you get it, the bank holds it for a while, then you finally get paid as a merchant. There's a huge cost to that. I mean, we're all paying the price of Visa and MasterCard without realizing it, but paying the price of a devaluating peso is a whole different ballgame. So that's the kind of, I said we talk about the financial inclusion side of it. With I think the way you get this disruptive innovation going is you create something that is better for a specific group of customers, and that comes to the financial inclusion thing. So from that access to USDT, and we talked about the kind of things that drive that process. Matt, what do you see as the sort of financial inclusion elements of crypto payments?
100%, and maybe it's not necessarily just payments. I think it's a bit broader than that. So USDT and a US dollar peg stablecoin provides a harder currency than the currency that many people in emerging markets are used to. So that in itself, before you even take the payment kind of world into account, is something that's attractive. People can access it once and sit on it, and basically have like a checking account or a savings account that's denominated in dollars with very low effort and requirements. So that's, of course, attractive. From a payments perspective, clear benefits, I think it's been spoken about a lot today. Blockchain makes perfect sense as a transport layer for money. It's open, it's fast, it's efficient. Why not do it?
Yeah. Aeryn, what about your side?
Look, I think there's kind of two markets that you're really looking at here. One of them mainly being is the low LSM markets, being able to have access to banking infrastructure that they couldn't have before. It's like Matt said already, from a checking account perspective, just having US dollars. From a low LSM, and we ran some campaigns before. Everyone knows what USD is. They not know USDT, but as long as you just denominate in USD, they obviously going after it in terms of especially expats living in South Africa. I think the biggest thing is if you have even just simple phone numbers to create Web3 wallets and an on-ramping service that allows them to get, say, stablecoins or USD-backed coins being able to use as a checking account, but then purchasing power at the end of the day, and then eventually remittance and cross-border side of things, the inclusion is tenfold versus trying to get a bank account or even just signing up to an exchange. So I think low LSM market, there is a very big opportunity there that is completely untapped. And then you have the other market, of course, which is more of the high-end side of things. But I'll not go into that, more LSM.
Tempted to say, doesn't PayShap fix this? You could pay somebody with the phone number. Maybe just stick with a no for that one. What governs the choice of instrument that people are using? Matt, maybe that's a question for you from a Tether. Why are people choosing dollars versus rands? And we heard the previous panel talk about the value of a rand stable coin. What's driving them to rands versus dollars versus crypto versus CBDC? How are they making that decision?
I think Aeryn already hit it spot on. It's that people recognize the dollar globally. It's a currency that's used for trade around the world. Most trade cross-border is done in dollars. People, wherever you go in the world, understand the dollar. Hence why I believe it's the one that people turn to. It makes sense for the traditional kind of trade and market.
Does that give us a problem? Does that lead us to a point where we're all storing our value in dollars and it starts to affect the South African economy? Hannes, what do you think?
I think as long as we have a well-functioning traditional system that works in parallel with the crypto system we now describe, I think it's going to be a while. I don't think it's something that's going to happen eventually. The dollar's got its own issues, as we know. So which way do you want to lean? I think in the end, it's whether you use it as store value or method of payment. And I think in this case, if it's a method of payment to a merchant that's going to convert it into something else or keep it in rands, for instance, I don't think it'll be a big deal.
So if we've got this ecosystem then, so we've got stable coins, we've got the exchange, we've got the payments mechanisms, and those things all kind of fit together. At what point does that start to take over from traditional TradFi or regular Rails or whatever? How do you see that working out? If you look to the future of Xion, do you see it being sort of absorbed into the system, or do you see it as just building and becoming the thing at the end of the longer term?
I think it's tough to say that it's going to become the thing, because when you look at payment service providers bringing in new payment methods, they don't really necessarily want it to contest too much against their current products that are already out there. So they want to be innovative, and they want to obviously have less fees on both the merchant and consumer front. I think from a consumer basis, it's obviously a lot more attractive. Especially when you're talking about maybe even just on a high-end side of things, when you want to transact with crypto, you wouldn't have to go sell it to an exchange and get it into your bank account and have associated fees and obviously the delay to do it, instead of just being a checkout using whatever crypto you want, the merchant getting instant stablecoin settlement and then being able to perform it in one click. So from my side of things, I definitely see the PSPs are now scavenging to get this new payment method. It's stablecoins we've seen. The fees are a lot less, especially on a remittance play and cross-border side of things. From a retail space, I think that's kind of where Xion really steps in. The easeability of being able to pay a checkout within one click from 60 different networks with instantaneous stablecoin settlement for the merchant, not having to swap it on different dexes just to get USDT to perform a settlement. From a consumer avenue, that's a big play, and we see that unfolding more and more as we go with different integrations.
Yeah, it needs to kind of disappear, and not, it's not like you don't, like the standard analogy is the internet. You don't think, oh, I'm going to go on the internet and use Facebook or something. It's exactly. Just Facebook and it works in the background.
Yeah.
What is the kind of thing that gets for me? I keep coming back to the adoption challenge of these things, and there's a kind of conflict between the banking system and the man and all these people like this who are thinking in terms of crypto and so on. What is the way that we get the traditional system to adopt these things? Is it a pricing thing? I mean, we've got consumers, particularly Argentina, driven by the value of their money just degrading over time, and so they've now got choice that they can take. How do you get the bigger TradFi system to start to embrace these kinds of things? Anybody dive in here?
Oh, let me take a go at that. I think it starts at SME level, and I think because we favor a decentralized type of system, I think the SMEs do that best. If we look at the success someone like Yoko have in South Africa, they targeted the SMEs, and almost every SME now has a small Yoko device. I think if you have the same approach towards the SMEs driving crypto payments at that level, I think eventually it builds a momentum and a flywheel that the bigger guys need to start taking cognizance of this as well, and I think then it develops on the onward.
Matt?
I guess education at all levels. Obviously incumbents are also highly risk averse, so there's an element of waiting for one of their competitors to pull the trigger first, and at that point then maybe it becomes a bit more attractive, and I think that's something you'll continue to see play out. To talk a little bit also to, you mentioned earlier about how that next wave of adoption almost, something that I've been seeing a lot is people building products on top of stable coins and kind of abstracting away that they almost even are stable coins, so that dollar balance is not the USDT balance, but it's a USD balance, and therefore it's a lot easier for a retail user to understand. For them, they're not transacting like on a blockchain. For them, it wouldn't make a difference whether it's on a blockchain or the way that they're used to sending money with M-Pesa, for example. So that's something that I think will enable the next kind of wave of adoption.
Yeah, I think that's a really good point. Maybe that's a good kind of summary to end on, because what we're creating here is a new infrastructure on which people can innovate. Being able to move money around is the kind of basic thing. If we can move money around, we can tokenize assets, we can start to move those around, we can start to create new business models. The sort of getting the flywheel spinning is fascinating. I think from an SA perspective, the inclusion thing is really interesting, and we've got, I think I saw the other day, 86 or 90 something % of bank adults are banked, but in reality they're not in the financial system. They just use the bank as a post box for money. So there's huge things there, and I think I think that infrastructure as the basis for a new disruption in the future is a kind of positive and good place to finish on. So I don't know how we're doing for time, but maybe we take some questions there. If Matt's around, is he? Oh, he's gone. Shout your questions if you have them.
So have you heard of any projects in South Africa that are entering the traditional space using Web3?
Any projects in South Africa entering the traditional space using Web3?
I mean, it depends what type of projects, I guess, that you're referring to. So, I mean, obviously from a PSP level, you've got lots of different companies that are entering that side, more from a traditional side that are integrating Web3 for stablecoin payments specifically. And, I mean, I guess we would act as Xion as being a Web3 company integrating into these PSPs to facilitate those payments, as well as Binance Pay and other likes.
Okay, and I see with Pick and Pay in particular, they're accepting around R1 million worth of Bitcoin payments. Do you see, ZAR-based stablecoin payments as the next natural evolution?
Yeah, I mean, I would say for sure from a like ZAR, for instance, perspective, there will be a lot more adoption on that side. I think my own personal view on Bitcoin payments is it's more of an investment vehicle, as well as Ethereum. You look at just South Africans, there's 5.8 million South Africans that are in crypto. 28% of them have Tether, and a very large portion of them are only using stablecoins to transact, even with the high volume on Bitcoin payments and at Pick and Pay. So I think from a ZAR perspective, sure, but I do, even just being partnered with Tether, I do believe might be biased. But USD side of things, as Matt said earlier, even from a low LSM perspective, that's what a lot of the low LSM are opting for. And abstracting that completely to even not knowing what stablecoin it is in the background and just having that USD value to start transacting with, perform remittance, have savings accounts, I think it's a lot more valuable than it comes down to using the localized currencies, because then, in my belief, they would use their cards or ZAR directly.
Yeah, I think from a kind of binary perspective, there's the Bitcoin and stuff as an investment vehicle, as a store of value. And why would you spend it at Pick and Pay? I mean, it's cool to buy a beer with Bitcoin. You do it once or twice, and okay, I'm over that now. But rather just hang on to it. But then the stablecoin from a daily use perspective makes a lot of sense, as Simon articulated just now. That should be a rand one in South Africa, ideally, because we live in rands, and if we become dollarized via crypto, then it has a whole bunch of knock-on effects, not least the sort of monetary policy kind of implications, but it creates a whole bunch of other problems that we've got enough problems, thanks. We don't need any more financial issues caused by moving to dollars and being subject to sort of private money and those kinds of things. So I think it's a really interesting one, but it's nice. It will be nice to have the option. And there's this program going on at the moment that Finance is running, the FinTech Association, to experiment with what we can do with rand stablecoins here and how we can start to do those things within the current rules, and then present it to the regulators and say, guys, here's what we can do. It'll be a whole lot easier if you had the right regulations around stablecoins. So here's where we think you should be going. Here's the kind of complex, slightly Heath Robinson, or coming with the American version, Heath Robinson, the sort of patched version that we can create now. But fix these regulations, and we can do so much more. And it's part of that process of enabling that innovation.
Okay, and just one last question. You mentioned the power of the lower LSMs, not only in South Africa, but across Africa. Do you believe to gain almost mass market adoption among lower LSMs, you actually need to introduce custodial wallet solutions to limit the barrier to entry and almost simplify the experience?
So 100%. I mean, I don't know if you guys want to take that role, but from a low LSM perspective, I see the only way mass adoption happens is that it has to be a low barrier to entry. So I wouldn't say custodial route, because you want to still have them to be in the power, and as everyone says in crypto and blockchain, to be your own bank. So simply like we do, we allow the low LSM market to create Web3 wallets with phone numbers and emails. No KYC, nothing else attached to it. We had, just the one campaign in a week, we had 10,000 new wallets created and about 7,000 transactions that resulted in that in airtime and data purchases, all the low LSM market. So Mass adoption will come. You just have to have the right infrastructure in place. I do believe non-custodial, especially from a Xion perspective, that's a very big push. We want people to be in control of their funds, but being able to participate in the traditional financial market. And I think from an on-ramping perspective, there's a lot more cleverer ways than going directly to the exchanges to actually get stablecoins into these low LSM wallets that are created with phone numbers, and being able to allow them to immediately stop performing remittance cross-border, obviously with the different regulation and ruling, whatever in place. But if you have that infrastructure in place, I do believe mass adoption will come.
All right, we're out of time, unfortunately, folks. Sonia has said we need to move on. So, Paul, if you want to give final closing comments.
I tried to do that just now, but I think I think for me it comes back to the thing I keep it back to personally, and maybe this is just me, is how does it become real? How does it become something that we're all doing? And it has to, as these guys have said, it has to vanish into the background. It has to be easy, and it has to be where it is just like the internet. Instead of unplugging your phone, plugging in the modem, connecting, doing something, and disconnecting, it needs to just work in the background. And we've got there with the internet. We'll get there with blockchains and crypto and tokenization, and stablecoins. I think is the first kind of entry-level drug, because at least it's not a new money. It's a new way of doing money, and we can pick it up and move with that and start from that and build on that. So, yeah.
All right. Well, gentlemen, thank you so much. Appreciate that. Let's give our panel a round of applause. Thank you.